Hey there. It's really interesting what's going on in Florida right now. The market is changing very, very rapidly. So the question is, what in the world is happening in the Florida real estate market that'll impact you as a buyer, seller, an investor, or even a real estate agent who's following this channel? Let's dig into the data that's been coming out recently and see what is actually happening, because the what's happening on the ground is changing very quickly, as I'm sure many of you have already seen in the news media and what's going on. Because basically right now we have two Floridas. There's one part of Florida where you're seeing uh, wealthy people move to Florida, buy houses, cash, and absolutely their stock portfolios are grinding upwards every single day. I think we're up like 17.5% in the last 30 trading days. It's phenomenal if you're a real estate investor. But the other side of Florida is the middle class and the low income earners, which is the majority of Florida. So what we're seeing right now is a massive disconnect between the two different Floridas that I want to go over with you. So look, home prices are already coming down in Florida across the board. This is great. We're starting to see relief after we had a massive, massive rally, the largest rally of home prices ever in history before, going up 44% within just a few years. And now we're seeing prices come back down and have a little bit of mean reversion, where we actually see in some areas prices already down 15 to 20%. This is great for the next generation of buyers, but it's still nowhere near enough when you compare to what's happening with wages to actually have people be able to afford and purchase homes, which is why what we're seeing a different trend where we used to have people from the Northeast and out West start relocating to Florida. We're now seeing people not come to Florida and they're opting in to go into the Midwest because the prices are just so unaffordable at this point in Florida. So what's happening, right? Because this chart looks good. This chart looks really good. This is median household income to Florida. This is from the Fred St. Louis. And it basically shows that the median income has gone all the way, from 20,000 all the way to 75,000, over the last couple of decades, which sounds fantastic, right? And by the way, if you're just listening to this is your first time, you can drop a comment in the chat. If you have a question, I will go at the end of this video and go through the chat and answer any question that you have. If you need a top real estate agent in your area, if you're looking to do a short sale, whatever you need in the state of Florida or across the country, you just want to get in touch with somebody who's the top agent, just let me know. About 80% of agents really don't do a good job for their customers. So just want to let you know that. You can email me and I'll drop my email in there. But basically, we had this massive household income growth in Florida over the last, couple decades. But, obviously the listing prices didn't make sense with the ratios of what your median income is. So while the income looks good on paper, it's not good in other aspects because it's a ratio basis, because we live in what I would define as a payment economy. So that means that basically everything that we do now is based off of a monthly payment because the consumer is so poor. It's the data just came out today about the credit cards debt just basically skyrocketing again. I think we're up to $1.3 trillion. So now we have a 5.4x ratio in Florida. So what does that mean? It means we have a $420,000 median price home and the median income is 77,000. So it's a 5.4x ratio, which has just jumped over the last couple of years because we had zero interest rates during this period and then it just skyrocketed, right? So zero interest rates here and then it just skyrocketed, boom. And then when the Fed started raising, rates in March of 2022, we saw prices continue to drift down because a lot of the speculation that happened started to dry up. But ultimately, we have one of the worst ratios out there in the country for people to be able to live from a median aspect. So 50% of people can't even afford a home in Florida, which is a huge problem. So, but that's just looking at the payments. But once you add in the homeowner's insurance, the taxes, the HOA, the maintenance of the property, it can become really, really expensive. So this is approximate monthly payment on a median Florida home. Principal and interest only, assuming you even have the 20% down, which most people, honestly, they don't have the 20% down. But you can see the median price home, it used to be, this is when I moved here to Jacksonville, 180,000. I bought a $190,000 house. I had a $1,200 payment. It made sense because my rental was $1,200. And I said, well, I might as well own a house versus live in an apartment for $1,200. And altogether, this is just the principal interest. But when you add all the taxes, HOA, maintenance, etc., it comes out to be a lot more. So, but over time, it just skyrocketed, but the wages did not keep up. And you can see a lot of the issue right here is in 2022 when the Fed started hiking, short-term rates. it basically pushed the mortgage rates higher. And now your carrying cost for a median price home is often $2,700 to $3,500 a month. Now you calculate that out, you're spending $40,000 a year on your shelter costs alone. That doesn't even include the utilities or some of these other issues like maintenance. This is a huge affordability destroyer. And that's definitely true with what we see with insurance costs skyrocketing as well. And so we expect that there's going to be more pain down the line for Florida just because the ratios just got so whack over the last few years. This is the story of Florida. This chart right here just explains the issue. You can see 2013 to 2025, we've more than doubled the price and the rate is higher. And the wages have not doubled, right? So part of the issue is we are frankly building homes at the wrong price points. We're building so much mid-level luxury properties and not starter homes. We're not building workforce housing, and because the builders don't make as much in those price points. So the builders were expecting people from the Northeast and the West to continue relocating nonstop to Florida. And basically what happened is that reversed 93% drop in net domestic migration and a 70% drop in international immigration to the state of Florida over the last, few years from the peak. And so this is a huge problem because the builders were thinking, okay, we're going to have all these, older people who've already built their wealth. They're going to come in, they're going to buy these mid-level luxury homes. And now that stream of people has dried up because we had a demand shock from 2020 to 2022 where those people already relocated. Right. We have basically 10 years of sales pull forward into 3 years. And that's why we're starting to see a gap here, and it pushed the prices up. You can see the areas that have the newest homes, the Villages, the Austin, Texas, St. George. These are the areas where they're just building tons of new homes. You can see in the Northeast, they're not building as many new homes. That's one of the issues. Their prices are high because they're the not in my backyard people. They're saying, we're not going to build as much. And so we're seeing a lot of people from the Northeast relocate out to the Midwest. Now, all those people who relocated to Florida drove those prices higher. We have all this, glut of supply at price points that people can't afford. And now they're moving out to the Midwest. So we're seeing this really play out in an interesting way. And it all comes down to affordability. And at the same time, we are just getting data from these mainstream media companies saying we have a housing shortage. Yet, how can we have a housing shortage when there's 46.3% of home sellers than buyers? The most recent data that came out. This is the biggest difference since Redfin started tracking this data in 2013. So we have a 630,000 gap. So the problem is we don't have a housing shortage. We have a housing mismatch. We underbuilt affordable workforce housing in starter homes, and then we overbuilt or pre-supplied these mid-level luxury homes that people can afford. So these mid-level luxury homes, we're seeing this locally. If you listed your house in, let's say, the 500,000 to 700,000 price point, and you're an existing home and you're near a new construction community, and you bought in 2022 to 2025, you are completely underwater on your house already. And these people are getting stuck, and we're seeing tons of short sales now, which will be the next wave of distress that happens throughout Florida. But this is what's happening. These sellers, life happens. They need to move after they buy the house, and they get stuck underwater. So this gap is continuing to widen, and it's both, buyer demand is dropping just because it's so unaffordable and it's much cheaper to rent in a lot of cases. And then sellers are kind of starting to move back down and kind of stabilize, which is because a lot of them, when they can't sell their house, they put their house back on the market. We call this rage quitting. The sellers get really upset that they can't get the price that they want. They list their house back onto the market, and they as a rental, and they become an accidental landlord. And that's one of the things that we're seeing right now. Now, you can see this. This is a great chart. Newest analysis from the National Association of Home Builders found that 71% of Floridians cannot afford a newly built home at current prices and mortgage rates. This is part of the reason why they're giving you massive incentives to buy their overpriced stick builds that are, 10-foot lot lines with no backyard. You can see your neighbor showering right next to you. I mean, it's crazy the way that they build these units. It's not any house that I would ever want to live in, but they continue to build these starter homes at 500,000. Just again, reflect back. My starter home that I bought was 190,000. The starter home today is between 4 to 500,000, and they have these zero lot lines, and they're horrible. I mean, and they're also usually built outward in the exurbs, outside the city where there's nothing there. There's no jobs. So who do they think is going to buy this moving forward? And so you can see where Americans are priced out of homes in 2026. Yes, there's areas where it's super expensive, like the West Coast up in the Northeast. But Florida used to be that affordable place where people could move to and start their life, and that is no longer the case. Just a decade later, this data has completely changed. And of course, when there's an affordability crisis, demand is tanked. So this is the Reventure Home Buyer Index. It basically puts a little bit of everything together: mortgage application, pending sales, internet searches, and buyer sentiment all in one index together. And the housing demand has tanked, and it's specifically tanked in the southeast, in the South, because in the Sun Belt areas, because this affordability crisis is happening, and they're building properties at the wrong price point. So the Midwest is doing better. The South is not doing, and prices are coming down. So there still are areas of the country that are doing pretty well from a demand standpoint, but it's not happening here in the Sun Belt areas. And look, so you can see that this is the payments. This is the cities with the biggest increase in the typical monthly mortgage payment. You can see it's just all Florida stuff that's just gone up. You can see this is from September 21 to 22. This is just because the Fed raised rates. That's all this is. And you can see how much it's jumped. 100%, 90% within just a year for the monthly mortgage payment. And that's because prices were skyrocketing. And this is the consequence of the zero interest rate policy from the Federal Reserve that caused this. It's nonstop government spending that is causing the dollar to devalue. And you put that on top of zero interest rate policy, and everything skyrockets. And the speculators come in and gobble up prices, gobble up homes, and they take the starter homes and the workforce housing first because they can raise the prices there. And it's the best bang for your buck. And then the builders come in and say, well, we're going to try to make the best bang for a buck too. We can make 7 times more money building a $700,000 house than a $200,000 starter home. In a lot of cases, these starter homes, they can't even make money because there's so much regulation, there's impact fees, there's permitting. It just takes forever to get anything done. And sometimes they have the local government step in and say, hey, I don't want you to build there either. So there's a lot of problems regarding the affordability and the workforce housing. And I'm not sure how it's going to play out. I don't see a lot of affordable housing units coming on down the line. The most likely thing that'll happen is this pre-supplied luxury will start to just tank in value over the next couple of years, and builders will wake up and say, maybe I should start building in affordable price points that I can actually sell. They're going to have to take a little bit less on the margin. Now, this just came out today. Consumer sentiment falls to the fresh record low in May as surging gas prices hit the outlook. So Main Street is getting crushed. We talk about the K-shaped economy here, where the top 10% is crushing it, the bottom 90% not so good. But the top 10% only needs so many houses to live in. So the bottom 90%, it's really not good for housing when you have consumer sentiment. Like, if people are fearful that they're going to lose their job, they're not going to go out there and buy their largest financial asset that they've ever had before in their life. And this is what we're starting to see. The demand is dropping. The consumer sentiment is falling. The consumer is loaded up with debt. You would not believe the stuff that we see on mortgage applications. We're seeing debt to income ratios above 45% all day, every single day. It's either somebody who's coming in who's scraping 2 nickels together, or they're very wealthy because their assets have been inflated over the last decade and they benefit from it. But ultimately, the consumer generally is getting destroyed. And this is really bad for the housing market and the outlook for housing. And right now, the sellers are starting to wake up because they list their house on the market. They don't get any activity. They realize usually about 8 months there's a delay of when they think they can actually sell their house. And so but here's the disconnect: that 83% of sellers think they'll get the full price that they list the house for, but 90% already had to cut their house last year. So there's just these sellers are thinking that they're still in 2021 time period. And in some cases, if you have a perfect, well-priced home in great condition and it's not near new construction, it's a unique, like, let's say, water view, yes, those are going to sell immediately, right? Because there's still demand. It's not a demand problem, it's an affordability problem. People do want to buy houses and start families and all this. They just can't afford to do so. And that's why we're starting to see the birth rates decline. Everybody's pushing everything back 10 years because of the financials, and they think that's a smart decision, but it's going to cost them big time down the line. But what choice do they have? They literally don't have the financials to support a housing payment in their family at the same time. So what I believe is going to happen is those who bought in 2022 to 2025, those are really the people who are going to be in the biggest trouble here in the Sun Belt areas, just because there's just so much inventory, especially if they bought in a new construction community. So that's why, part of the reason I made this uh, YouTube channel is just to tell people what's actually happening in the marketplace, because a lot of the narratives out there right now, hey, we have a housing shortage, this stuff's selling like hotcakes, and the media, frankly, is all bought and paid for. If you look at the media for housing, who's paying for these articles to be written, it's builders, developers, real estate groups, title companies, mortgage companies, all of that. But the reality, and that's why you want to watch this channel, is we're going to tell you what's actually happening on the ground from an operator who's doing this on a day-to-day basis with billions of dollars of residential sales under their belt. So locally, we're seeing up to 33% of listings get a price cut each week now. So you can actually see the price cut. So is it price change right here? 2486. That is crazy. We're seeing a lot of houses come back on the market, which means they went under contract. And we're getting tons of cancellations. Look at this. Expired listings is 10% of listings expired in 1 week. 1 week. So that means people didn't get the price they wanted. They took it off for some reason. And they'll probably about 80% of those will come back on the market down the line. So, and then of course we have new listings coming on. New listings aren't as strong as we thought that it would be this year. But the demand is not as strong as we thought either. So it's kind of adjusting downward, and it's causing issues. So we expect basically inventory going through the end of the year after busy season to continue to move up every single month a little bit. And we expect more sales to actually happen because we see sellers giving up on price. They're finally, after years, saying, okay, my house isn't worth what I thought it was. And they are actually discounting the prices, which is why we're going to see affordability come back in Florida the long term, because the sellers will have to, if they really want to sell, start to reduce their price. And in the meantime, existing home sales are getting worse. It's now down 3.6% in March, but new construction is doing great because the builder will buy down their interest rate, all the way down to the 4s and the 3s to get that deal to go through, which is way better for the builder than it is for the customer. If you're a customer, you want to negotiate new construction, reach out to me. I'm going to put my email in the chat, because you definitely don't want to be going in there without a real estate agent. There's things that you can negotiate that you would be surprised that you can negotiate in the community. So definitely reach out to me. I'm happy to be a resource. I reply to every single email that comes my way. But ultimately, this is good news. More and more sellers are understanding they need to list their price appropriately and bring their prices down to what reality is. One thing that's really easy to do, that I do, is I share with the seller what the new payment would be if they bought the house today at the price at today's rates and prices, and ask them if they would rebuy their house today at those same price and rate. And most of the time they're like, wow, the payment's double what I had before. That's crazy. How can anybody afford that? And that's where it's like, yes, exactly. So you need to be willing to negotiate when that buyer does come through. Make the repairs, right? Give them the concessions that they need for the down payment, all that kind of stuff. Not in all cases, but in most cases, this is the reality. Now, the affordability index is still grinding along the bottom, so it's getting a little bit better than last year, but not enough. The regional improvements for the South's getting better, the West, the Midwest, and the Northeast. So everywhere is getting better from an affordability standpoint. That's partly because rates are down about 30 basis points. But it's also because the prices are starting to fall. So affordability will continue to get better due to the price cuts and the mortgage rates coming down. This is how you can tell that a market's shifting. So again, there's no housing shortage. Okay. We're just not seeing it at this point in the market cycle. And then, I referred to this at the beginning, but the consumer sentiment is just grinding along the bottom, and it gets worse every single month. So this is a huge disconnect between Main Street and Wall Street, right? Because we're seeing stocks just break records every single day. Meanwhile, the consumer who doesn't own any equities, doesn't have any assets, is just getting absolutely crushed. So it's really hard to watch. I feel bad for the middle class. The middle class is thinning out and people are basically dropping, but that's going to be really bad for real estate long term. Who's going to be this next wave of buyers that can afford to pay these prices? And there's just not enough of them out there. And the ones who could already bought, frankly, they already bought in 2020, 2021. And now, so it's just going to be new people entering the market, or people relocating and having life happen. So it's not just like natural demand. So look, if you need help on your real estate, no matter where you are, reach out. I'm happy to be a resource for you. Again, I respond to every email. I'd love to hear from you what you're seeing on the ground in your individual market. But I can tell you, in Florida, it's the tale of two Floridas. There's the wealthy, and then there's the working and lower income folks, and they could not be more different in and this is actually changing migration patterns because people see less opportunity here in Florida than they have before. And I know people are saying, well, property taxes, exemption, and all this other stuff's going to come through the pipeline. We don't know what's going to happen. We haven't seen the final proposals for that, but it's not going to be enough to fix this affordability problem. Florida needs better paying jobs and it needs affordable housing. And if we don't fix those two things, people aren't going to relocate here for the next generation. You're just going to continue to have the baby boomers move here. And that's not necessarily a problem now, but it will be in 20 years as the silver tsunami plays out. And then you have to figure out, well, who's going to own all these homes as these people sadly, pass away. And we have about 22 percent of Florida as the baby boomers age or older. And so that's going to be a huge factor that's going to be playing out here. And you should probably check out your local area as well in terms of the age demographics, because that will be the big question. Who will be the next buyer 20 years from now? And I'm just going to continue to pound that point on every single video because it is one of the most important factors to think about, because real estate is priced at the marginal buyer. Okay. So look, I'd love to answer any of the questions in the chat. I'll hang around here for 5 to 10 minutes, and I hope you have an awesome Friday and an awesome weekend. But yeah, if you want to more, just stay on here and I'll answer any of the questions that you have. So here in NorCal, existing single family prices are going up, no inventory, bidding wars. Yeah, I mean, it's totally possible. The massive shortage of existing homes for sale. This is what we talk about, the regional differences in the K-shaped economy. So if in northern NorCal, they're not building anything and there's no inventory and there's lots of demand, of course, it's going to push prices higher. That's the opposite here in Florida. We have tons of building and then nobody can afford to buy what they're building. So it's a stark contrast when you're looking at those individual areas. 700K home jammed up against your neighborhood window in a row of identicals that make a lot of money. Yeah, they're so ugly. I don't know who is buying this stuff. But they're so ugly, but people want new. I mean, that's the thing. They don't want an old house. They don't have the money to fix it up in a lot of cases. So they'd rather just buy new. And then they're, 5 feet away from their neighbor and they can hear them arguing in the house next door while they're eating dinner, which is crazy. People can rent the same home for half the mortgage. Taxes, HOA is a disaster without crazy price appreciation. Yeah. So in a lot of cases, tax cattle, basically, it makes way more sense as a buyer right now to rent and wait for prices to come back to reality because it is cheaper. Use that extra money to put it in the stock market. We're seeing a lot of people do that. So I think that's a great comment. You just need to be aware of what your opportunity costs. John is great, but does not get that Florida is not the rest of the country. Yeah, Florida's not. I agree. Florida is not the rest of the country. There's some markets, even in Florida, there's markets that are still doing well. So it's very, very hyper local on what you are seeing in the marketplace. So, Jackson, like Tampa's doing is getting hit right now. Miami's getting hit. The condos are getting really hit, but there's pockets of Florida that are still like kind of okay. Like Ocala is okay. Gainesville is okay. Well, why? You have to ask yourself, why are these areas doing well? Well, they're slightly more affordable. They revolve around a university and a healthcare system that's more steady Eddie, right? So not every area of even Florida had this massive speculation boom from the builders, the investors, the mom and pops, all of them. So I think this is important, right? And it's every state is different. Even Jacksonville is like 5 cities in one, where there's certain areas like the beaches has a limited supply of inventory. There's nowhere left to build. There's high demand from the Northeast and the West of people coming in with money. Those houses won't be impacted as much as the cookie cut. What I'm saying is going to be the most pain is the cookie cutter houses that are the 400 to 700,000 that are built on the outskirts, that, in the houses that are going to lose the most are going to be the existing homes that are near those new construction communities, because they're just not going to be able to compete. And that's where we're seeing the short sales, the foreclosures, all the stress into the market system. So I think it's good. It's a good point. Yes, the whole market is not like Florida. And in fact, there's actually areas that are the opposite. So just keep that in mind, that you need to be really micro. And that's why you need to get in touch with a top agent who really knows your market. Just like I was saying, Jacksonville is like 5 cities in one. A 60K house selling for 500K in Florida, where you can't drink the water. You must have water treatment plant inside your home, additional 20K. I live in Jacksonville, Florida. I have not had any issues with the water here at all. So there are definitely issues. We're having a drought right now in Florida. Like many areas of the rest of the country, but there's no water issue that I'm aware of in Jacksonville. How will the hantavirus pandemic impact home prices in Florida? Look, we have no idea. It's too early to tell, Florida man. So thanks for the question. we have no idea how another virus will impact the market. Obviously, last time it came through, we thought that real estate was going to be dead for a while, and then the Fed moved rates to zero, and then real estate took off. So again, it depends on what the Fed does. So the saying, "Don't fight the Fed." That's really important. NorCal is not the rest of the country either. The AI bubble is certainly fueling the real estate bubble. Yeah, that's right. People are having their vesting stock options. They're using that cash to go buy a property in NorCal. All my dropout friends are mortgage brokers now. They must be going through tough times. Yes, so the mortgage industry is down like 70%. It's been really rough. Especially because a lot of these people relocating, they buy cash, so they don't even need a mortgage. So they're just going around that entire thing. And so the mortgage brokers are just trying to keep deals together with the real estate agents and make things happen. So look, if you have any other questions, let me know. You have my email. It's john@movewithmomentum.com. You can follow me on X. I put information out there, every couple of hours based on the data that I'm seeing happening. And I do a video on Tuesdays and on Fridays. The Tuesday video is pre-recorded. I release it. So I appreciate a subscribe. Any comments you could do, any thumbs up. This channel is great. I'm just trying to get the word out of what's actually happening on the ground in Florida and in certain areas around the country. I talk with top agents across the country, every single day. And, I used to work as a real estate investment banker on Wall Street. So I use my investment background and my, the details that I have from that I learned working with alongside, American Homes for Rent, Progress Homes, Invitation Homes, First Key, all these folks that came in and gobbled up all these single family rental properties, gave me a really cool insight into how the industry operates in the financial plumbing to move this business forward. And I think the one biggest thing I would say is the builders over speculated this mid-level luxury, and it's going to cause tons of problems down the line. And we don't have the workforce housing, so we're not going to get the demographics, and demographics are destiny. So we're building at the wrong price points, and then the people aren't coming because we're building at the wrong price points because it's no longer affordable. This is a huge problem for Florida long term, and that's why I expect prices to start falling, pretty rapidly. Oh, you're not like what rapid is. Let me put that in context. It could be a 10-year structural decline. And that's what I mean by rapidly, because real estate's in a liquid asset class. It takes time for this stuff to play out. It's really slow, and people extend the distress as long as humanly possible. One of the last things they stop paying is their house. Obviously, they need their car to get around, but they have to they don't stop paying their house, or they try to get workout programs or some sort of program to prevent the foreclosure from happening. In Florida is a judicial state. It has to go through the courts. It can take a year or more to go through a foreclosure. So this is really important to understand. The stress is there. It just hasn't processed through the market yet. And that's why we're saying look out for Q3, Q4. You're already seeing foreclosures tick up every single month. It's going to get worse every single month. There's going to be more short sales and foreclosures. That's going to cause prices to come down. The builders need to get out of their product as soon as possible to get their cash back. And this is what we're seeing on the ground right now. I'm also seeing hedge funds call me saying, I need to sell my whole portfolio. I'm no longer cash flowing. And they bought, 2019. So even these people who bought, prior to this massive run up, their equity is getting destroyed because there's not a lot of buyers who want to manage that level of product. So it's really interesting. Yes, exactly. Well said. Extend and pretend is exactly what's happening. And if you don't have any equity in your house, you're going to give it back. And there's a lot of people who are VA buyers that have 0% down, FHA buyers 3.5% down, and FHA delinquencies are already up to 13%. So we're going to see more distress kind of happen through the system going into the rest of the year. This isn't anything to fear. If you're a long-term hold investor and you got your financials well, that's great. But if you're one of those buyers from 2022 to 2025, retail buyers paying full price, I think you're going to be underwater, especially after the round trip cost of what it takes to buy real estate. 10%, basically 5% on the way in, 5% on the way out to be able to acquire real estate. So look, again, if you need a top real estate agent in your market, reach out to me. I'm happy to put you in touch with somebody. I send out a bunch of referrals every single week. You just want to connect and run a scenario by me, I just dropped my email below. You can follow me on X and send me a message there. I love sharing with people what's actually going on the ground. So thanks so much and have an awesome weekend.